Hello, let's look at HDFC Bank today as well. Now, HDFC Bank is a very interesting stock actually because of the way it's performed. Its performance is in pockets, is the right way I would describe it. It follows the Nifty very closely, but also it does its own little thing as well. We can talk about what that is. If you look at it from obviously long-term analysis, 106, 100 rupees, it started from going up to 1654 currently, approximately 1670 right now. That's a significant amount of return, 16 times your money invested if you'd ever put it in around 2009 and 10, right? 2020 saw a dip, of course, like the broader markets. You did see um, a drop in prices and then a very quick scale up. Now, like Infosys, HDFC also did this very, very significantly. Now, but HDFC is different from its sectoral banks. HDFC is done done with quick gains just over 6 to 9 months, and that's it. It's been sitting sideways since then, since 2021. So for an investor, if you got in early, the last 4 years have been a significant waste of time, if you'd like to call it 3 years. Yeah. So how do you go about looking at a stock like this? That's perfect. That's given you 16 times returns. The last 4 years are a base formation, right? 3 years plus a few months, 7 months in for this year as well. It'll be considered base formation. Look at these levels that I've mapped out here. These are really going to be important. HDFC scaled up and formed these peaks. Let's go into the monthly chart. If you look at the monthly chart, it makes it quite simple to understand what it's trying to do here. Again, a false bottom here that I spoke about for Infosys as well. HDFC did that too. It tried to test it, say that, oh, I'm breaking out of this zone. And again, a false stop here, trying to break out of the zone, but it didn't. It came back. Right. So it's constantly doing this, testing those tops and bottoms, testing the tops and bottoms. The real zone is from 1411 till 1654. This 250 odd point, 40 odd point zone is where HDFC is busy. What it's doing is it's trying to form a base. After a significant rally, this is what should happen. It's a good practice, it's a good thing, especially given the fact that we've seen a lot of significant amount of gains in a very short time, right? Now, 3 years, 4 years of base formation is quite difficult. Um, it offers buying opportunities in this zone, but not with very significant returns, right? Maybe 10 or 15% returns during this time maximum. Now, is HDFC looking good to go? Yes. Currently, the way I see it, if you look at the weekly chart as well, this is going to be confirmed quite well as to how it's forming this wave around this zone. With broader market support, HDFC looks good to break out of it. Now, obviously, you've seen candles out of this zone quite a few times. There's been a significant high uh, closing as well, but deeply red candles. There's selling here happening too because there'll be profit booking, of course. But also given the fact that there's very strong buying happening at around 1411. So the levels to look out for you are going to be these. 1654 is very significant. 1582, 1520, and 1411. Below 1520, again, it'll be busy forming that base. It's going to go again sideways and get busy at sustaining. It's not going to be a performing stock at that stage, right? But below 1411, I would not keep this with me. Below 1411, if you see weekly, monthly closes, I would get rid of it. And if it's constantly again going there, right, I would say it's not ready to break out. So 1654 is a very significant level to watch out for HDFC. It looks good currently, despite the last 4 years being in a sideways zone. That is just a base building exercise. It is not a loss of momentum. It is just HDFC making building a lot of strength to move up. Now you can some of these indicators that you can see also. This is a moving average 240, so it takes into consideration a whole year of trade almost, and then you can see how that's also mapping out very closely to the levels that we're seeing here currently. So that's HDFC Bank for you. Thank you for watching.